Now, in this video, I want to talk to you about something extremely important. The bears that told us this rally was never going to happen, the bears now doing what I told you they would do. They're screaming counter-trend rally. The bears told us back of the launch of the reciprocal tariffs that we're about to have a Black Monday style crash, like the Black Monday crash in 1987 where we saw a 25% drop in one day, or like the Black Monday crash in the 1929 crash. What we were told was going to happen, and the opposite happened. We bottomed. I told you into the week of the reciprocal tariffs, Friday the 4th, and we had the 5th and 6th there over the weekend. Videos I talked about the stock market was in a bottoming process and likely going to bottom surrounding the reciprocal tariffs the following week. Told over that weekend, and as the week ended into the following week, we were told that we we're going to have a Black Monday style crash. The complete opposite happened. A bottom formed. Everybody is expecting something. When the herd expects something, Kramer running around saying we're going to have a Black Monday crash, everybody echoing that, repeating that. Opposite happens. The bears told us we were going to have this crash. The herd, Kramer telling us, oh yeah, we're going to have this crash. Bottoms. We were told there's no way that this rally was going to happen. And yet now the NASDAQ's rallied up 21%. The S&P's rallied up about 18, just under 18%. Bitcoin has rallied up over 30%. We were told that this wasn't going to happen. No possible way. I told you we are at major support. And let me just bring it up here. Major horizontal support on the NASDAQ and the S&P. And I told you directly below this low was the 200-week moving average and our 50-month moving average. Okay, those are major support levels. If we take those levels out, that's extremely bearish, and that's it. We're toast. If we bounce up these levels, I believe would happen, extremely bullish. Now the people that told us that we were going to crash at the bottom, and the people that told us this rally on the NASDAQ of 21%, I think it's a little bit more than that now with today's rally. It's about 22% now. Told all the way up now that, again, we had that big rally with the Trump pausing the reciprocal tariffs the day they launched, which I told you was likely going to be the case. Why? Because we saw the same thing with Canada and Mexico back in February. Trump was either going to end up pausing them or delaying them or reducing them or something, just like he did before. It's correct. Trump immediately paused them, except for China. Trade tensions with China, and yet the market is still going higher. Rally of hope I told you about. All this week, last week, the bears keep telling us, that's it, the top's in, it's over. Yet, the NASDAQ and the S&P have continued to climb higher, back up to the horizontal resistance level, back up to the 200 periods. That's why I told you down over here, we're going back up to the 200 period moving averages for a test. The bears told us we were going to have the crash and no way we get the rally, and the herd that said, yeah, that's right. The herd that told us we were never going to sell off to begin with back up at the top, they piled in at the top and they sell at the bottom. Extremely bullish at tops, extremely bearish at bottoms. That's what the herd does. Experts on the financial channels up here, no way we have a recession. No way the stock market can go down. The experts are telling us in the media we're going into the next Great Depression. Echoed that we were going to have a stock market crash, and the market bottomed. I told you the sentiment was extremely bearish here. So now we're back up at the 200 period, and I told you back down here, people that told us we were going to have a crash and that there's no way that we're going to rally back up. I told you we were going to have the massive rally of hope. I told you we're going to come back up to the 200, tag it or overthrow it, and then we're going to get some kind of sell-off. Now we've had a winning streak. The S&P is in a 9-day winning streak now. At some point, we're going to pull back. Maybe we overthrow these levels a bit, the 200 period moving averages. Maybe we turn down off of them and pull back. Likely going to have a pullback. We've had a massive winning streak over the last 9 sessions. Higher low 2 weeks ago. S&P and the NASDAQ way down here. Do you see it? Way down here. Look at this. Boom. Up at the 200 period. The bears are telling us, okay, here comes the crash. I'm still waiting. told you that the stock market was in a bottoming process down here. We are likely to bottom with the reciprocal tariffs, the launch of the reciprocal tariffs, because I believe that a pause is likely like what happened with Canada and Mexico. I predicted that we would have this massive rally back up to the 200 period moving average. I was correct. I predicted that when we got up here with the 200 period moving averages, the bears were going to be screaming trend rally, counter trend rally, may even overthrow these 200 period moving averages closer to the 78.6 Fibonacci's, or even overthrow that if we see the de-escalation day happen next week or over the weekend. Certainly possible. Now being told, here we are at the 200 period moving averages. The bears, the herd told us we weren't going to be going back to. Now, oh no, it's a repeat performance. We came up here to the 200 and now we're here at the 200. It's just like over here. Back over here in 2022, we dropped below the 200, we tested it, we got rejection at it, and then we came back up to it and we got an even bigger dump. Proves we're going into the bear market. Case closed. Here's the proof. Exhibit A. See, the problem is you're looking at the daily chart and you're looking at the 50, the green line's at 50, the black line's at 200, and yeah, we're coming back up to the 200 as I correctly predicted we would. We bounced off support. We bottomed with the reciprocal tariffs as I correctly predicted we would. Problem is that if you come back and you take out this support level, right below it is a 50-week moving average in the weekly time frame. Below it is a rising trend line from the 2009 bottom. If you get rejection here and you come back down and take out this level, then that would be extremely bearish. The fact that we have bounced off this level is extremely bullish. The fact that we have a three-leg push lower in what looks to be an ABC move means this was likely corrective. Means that we're likely still going to new highs. Now, you say, oh no, see the trend line in just a second here. No, the death cross, this proves it. Look what happened over here. Yeah, we've had a lot of death crosses in this long-term bull market. What are you talking about? The bull market started right there. That was it, and it's over. NASDAQ and the S&P, they dropped more than 20%. That was a bear market. It is not a bear market. It was a major correction in the longer-term bull market. We never took out 200 and the 50 and stayed below those levels. They said it dropped more than 20%. That defines market. No, it doesn't. Multiple times where we've dropped more than 20% in this longer-term bull market that's been created by the Fed's QE and AI. It was a major correction in the bull market. In 2020, we dropped more than 35%. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. If I have any sponsors, I turn all those offers down. I just have a direct relationship with you because I don't want to sell you a bunch of stuff you don't need. I need to hear from you. Take a moment to step up to the plate and help out. I would really appreciate it. Just follow the link below to take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. Please consider partnering with me and supporting the channel today. I thank you for your consideration for that. Back on Sunday, I'm covering the NASDAQ in this video. In the next video, I'll be covering the S&P 500. Important things to say about what's going on with the NASDAQ 100 in this video. You know, we dropped 35% on the S&P 500 in 3.5 weeks. Was that the shortest bear market in history? No. It was a crash move, a major correction in the longer-term bull market. Now, we've got this test of the 200 period, and again, people that told us the rally was never going to happen, the people told us we were going to have the Black Monday crash, they're now telling us, oh, here it comes. They've been saying all the way up. Now, this is the 9th time in this bull market off of the 2009 low that we have now had the 50, the green line, cross below the 200 period. I've marked them here in red. I got rid of price so you could just see the crossovers. Right, we could actually count at 10 because there are actually 2 of them right here. There's one, we got back above it, and then we dropped back below it. 9, 10, however you want to count it. We had one in 2010, 2011, 2008, 2012. We had one in 2014, 15 and 16, we had one in 2018, we had one in 2020, we had one in 2022, we have one right now in 2025. Say we've had 9 crossovers. Again, the crossovers were associated with the bottoms. Just like with Bitcoin, it got these death crosses, and right about the time that you've gotten the death crosses, formed just before it or just after it. I think we're likely going to see something like that here to finish the blow off top, to get the final climax rally to finish the blow off top. People tell us, oh no, we've had the death cross, it's over. Well, what about all these other, 8 times that we've had the death cross? Death cross was associated with the bottom. Just bring up price. This is a daily chart of the NASDAQ. If I just bring up price, again, we had the death cross with the flash crash there. It was associated with the bottom. In 2011, again, lost the 200, lost the 50. The death cross, it marked the bottom. 2012, 2015 and 16, we had 2 bottoms there in 15 and 16. Death cross was associated with the bottom. In 2018, the death cross was associated with the bottom. In 2020, we got the death cross, again, moved beyond 200 period moving averages like we've done right now, associated with the bottom. Now we have the death cross over here, only associated with this short-term bottom, and we got a bigger, longer-term corrective move. The massive run-up from the 2020 low with 2021. January 2020, or actually the November on NASDAQ, November of 2021 high. I'm telling you, look, these bearish death crosses have been associated. Bottoms, the narrative right now, we've had this rally, it's a counter trend rally, and again, these are the people that told us that the rally was never going to happen. I'm telling you, get a pullback at some point, and maybe here, or overthrow this area, and then get it. We're going to get a pullback at some point. When we get it, the bears are going to say, see. Going to get a higher low that ends up setting up. Now, so I think we take out the 2025 February peak. As we're coming up to the 200, maybe we overthrow this level somewhat. If we end up getting a big de-escalation day rally, we pull back, and then we get a big rally with de-escalation day. It could play out a couple different ways. But as we're coming up here, and we've had this death cross, this is about to happen. And again, as we're bouncing off horizontal support on the NASDAQ and the S&P, we're coming back up to the trend line right here that we broke. This trend line with our linear scaling right here, we had this trend line, and this is the trend line when we broke it, we dropped below the 50-week moving average. You see the 50-week moving average. Took us down to horizontal support just above our 200-week moving average. 200-week moving average often acts as major support, and that's why I said if we end up going lower, which again, it looks like a 3-leg correction to me, but if we do have a WXY complex correction, we end up going lower, which I think is less likely. WXY is still corrected pattern. That means new highs would still be coming. I think so. I think we have a correction. I think we're going to end up going to new highs now. Valuations like the Buffett indicator, a market cap to GDP, and the Shiller P ratio, these things are telling us that for the next decade, returns are going to be low or negative. So I think you're going to peak, and I don't think you're going to see these highs for a very, very long time, for years. The next bull market, after we sell off sharply, will likely create a lower high. I talked about this previously in the monthly time frame. We're coming back up to this broken trend line, and again, like I talked about, and you're going to hear back test, you're going to hear counter trend rally. Here we go, and again, overthrow this level and pull back, or come up to this level, or right here now around the 50-week and the 200-day moving average in the daily. You're going to, at some point, get some kind of pullback. We've had a winning streak. At some point, you're going to get a pullback. Go higher, but you're going to get a pullback. But again, another trend line that I'm kind of watching. 20-week moving average are directly overhead. We have to take out the 200-week moving average here, the black line, if it's over. And if we sell off and we take out that level, stay below it, that's going to be extremely bearish. I think this move is corrective. I think we're going to go to make new highs. I think we're going to top probably later in the summer or on into the fall somewhere. Sell off being deeper has bought in the market more time. It really has. because it's going to take longer to recover, and that pushes it out further. So likely get the recovery period as we go into the summer months, maybe as long as the fall. We'll see. I will say this, we do have a really nice looking channel here with our linear scaling with the NASDAQ. I want to show you the monthly chart, and that bottoming tail, we actually rebounded and got that bottoming tail, ended with a positive close up 1.5%. Right now we're up for the month right now, just at the beginning of May, we're up 2.72%, nearly, 3%. But again, let me repeat, we're likely going to get some kind of pullback at some point in the near future. So bears are now telling us we're at the 200. It's going to be 2022 all over again. That's what they're saying. These are the people that told us the rally was never going to happen and that we're going to have the black Monday crash at the bottom. Well, right below this low is major support. Here with horizontal support in the weekly time frame, our 200-week moving average, and in the monthly time frame, where we just got the hammer, covered all of the losses for the month of April with the NASDAQ. S&P had a small loss. The NASDAQ had a gain of 1.5%, but we got this massive bottoming tail. Where did that happen? Well, it happened at the 50-month moving average and the trend line. All you got to do is look at the monthly chart. This is the NASDAQ 100 monthly chart. And again, from the 2009 low that's set up here at that double bottom down there in late 2008 and early 2009, connect that to the sell-off with the pandemic. That's it right there. Hard to believe, isn't it? Bounced off the 50-week and we formed this trend line right here. Then we came right to it at the 2022 low. And in 2022, we bottomed at that trend line. And the 50-month moving average, our 200-week moving average. The 200-week and the 50-week have to break in order to have the bear market. Don't have that. 50-week constantly. We got above the 50-week, the green line back over here. Okay, it acted as support here. We were above it. We came back to it at the 2020 low. We rose. We came back to it at the 2020 low, and then 2022 low. We came back to it, and here we are just above it right now. Now, likely we have a bottoming tail at our 50-month, 50-week. If I said 50-week, it's 50-month. 50-month. We're in the monthly time frame. It's more likely we have a bottoming tail at the 50-month moving average in our trend line of support. It's more likely we're going to go make new highs and end up forming a divergence in this more recent price action, probably very similar to what we had over here at the 2021 peak. We had this divergence right here. It evolved into a larger divergence that gave us this sell-off. You're likely going to form another point, a reference point of a divergence, and we've had that along the way. We had it over here in 2018. We had it over here in 2015 and 16. I think it's likely you're going to set up another divergence here in the coming months ahead going into the summer or the fall. You go lower, you got the 50-week moving average right there. You've got the trend line. We're just above it. That might be all she wrote because we did get a bottoming tail. Was the topping tails in the monthly time frame back in December and February that gave us this sell-off. Now we get a bottoming tail, something similar to this. A massive bullish hammer with that bottoming tail here in the monthly time frame. And here you can see the 50-week moving average directly below. That is key support. If we come up here and you end up getting a WXY, again, it's likely gonna do this, which means it drags things out even further because a WXY is still a corrective pattern, just like the ABC that I've marked the low at. I think it's more likely you've bottomed. You're going to either go higher and get a pullback or get a pullback, rounding the 200 period moving averages and the Fibonacci retracements. I think you're going to end up in these monthly timeframes setting up a divergence on the RSI in the more recent price action, and I think you'll probably get one here on the MACD. If we zoom out even further, the last two bear markets, we dropped below the 50-week and we got a much bigger dump. And to move the trend line here, I zoomed out, and so it move my trend line on me. But again, you can see the 50-week moving average, or 50-month moving average. Here I go again. 50-month moving average, we took it out, and we got a much, much bigger dump. This is the bursting of the tech bubble. We ended up dropping 82%. You're going to see something like that here with the bear market. Once we lose the 50-week moving average, there we go again, 50-month moving average. Once we lose the 50-month and the 200-week moving average, once we lose these levels, then again, I think you're going to see a much bigger decline. Right now, I think you're likely going to bounce off this level. Same thing over here. The NASDAQ just couldn't have the recovery. P went back up to the 2,000 highs for a test. NASDAQ couldn't do it. Ended up having another bear market, but the drop wasn't as dramatic because we didn't get the big run up back up. We've had the run up here. Again, when this tops out, you're going to see a pretty dramatic move. So just know, if we lose this area, if we lose this trend line, if we lose the 50-week, and we're just above it with the bottoming tail, if we lose these levels, extremely bearish. This is you're getting a bottoming tail at these levels, and you're likely to go higher. But again, make you aware of these support levels here in the monthly time frame with our 50-month moving average, our trend line, our 200-week moving average, and our horizontal support. This is major support, and if you take these levels out, here with the 200-week moving average, we had bounced off of it the last time around. And with the 50-month moving average, we bounced off of this level. If we go down, the downside probably isn't going to be much below this level, and again, it's my personal opinion that we're not going to go down further. I think we have bottomed. Here's a Tonos. Here comes a crash. Here comes a crash. And by the way, NASDAQ was at 3.45% for the week, and we're up about 22% off of the lows. Now, if we look at the log scaling, the channel's not quite as nice. We have a little overthrow right here, but again, a decent looking channel here with the log scaling for the NASDAQ weekly chart. Again, I think that you're getting a wave one, likely going to get a wave two, and again, we might go higher before we get that pullback, but we're right at that 200-week moving average in the daily time frame, 22%. And the bears are telling us that told us the rally was never going to happen, telling us, hey, now it's going to happen. This is what I do think is going on. I think we've had intermediate wave 4 complete with an ABC correction, and I think you're going to get this intermediate wave 5 probably going into, the summer, maybe August, maybe on into the fall, going into September, possibly October. Bought us more time, and I think that this is likely going to be the case. I think you're going to end up seeing the RSI come back up and get a massive divergence building upon what we've already had that has given us this sell-off. I think the MACD is likely going to do the same thing, that it'll end up recycling back up and getting a lower high somewhere into the summer or the fall. Now here's a daily chart up close. Here's that test of the 200 period moving average in the daily time frame. The cloud is directly overhead. Got that black candlestick. I told you it's meaningless. We got that on Thursday. I told you it's meaningless. And the bears were saying it yesterday. Oh, the black candlestick. They told us when we reached the 50 period moving average that when we started to get that sell-off, and what happened? We ended up closing positive. Told us when we came up to the trend line. That was it. Told us this sell-off, previous sell-off, that was it. And I told you again, we already bottomed and we were going to get a higher low. That was correct. Going to get a rally back up to the 50 and the 200. Oh, what happened? We got a rally up to the 50 and the 200. We're just below horizontal support again. If you stall in this area and the cloud and the 200, you could pull back. You might blow past this area. Again, if we see a pause or a delay of the tariffs, a pause or a reduction of the tariffs on China, the market soar right past this area. I keep saying that, and again, it very well could be. Again, I've been calling it de-escalation day. Maybe we get a slanted neckline, this one's sloping higher, and maybe we pull back and come back into the cloud and get a right shoulder, something that looks like that maybe. It's very possible. If we do have a 3-leg push, could be setting up a massive leading diagonal going into the peak. That's certainly possible. Or this could be still a 5-leg push higher or an impulse move and just may not be done yet. We go higher and then we pull back and then we go a little bit higher and we complete a 3 and a 4 and a 5 and then we come back down and then go higher to get the 2. Could play out that way as well. But again, people that told us this rally was never going to happen, they're saying this move is corrective. No, this move is corrected. That is clearly a 3-leg push down. This is done. Okay, we've already validated the bearish count right here by going above that level. Possible it's a complex correction. We have a WXY, and that's what I'm telling you. If we go lower, you've got major support down below this low. My guess is that's not going to be the case. I'm telling you that if I'm wrong about taking out this low, then you still have what? A corrective pattern, a WXY, because we had a 3-leg push down. We broke the downward trend line. We've gotten the 10 back above the 20 period. We're holding above the 10 period moving average. The MACD is now in positive territory. Great sign. You know, when Bitcoin had this recently happen, it began to really surge. So again, we're back in positive territory. The RSI is back in the positive region above 50. All bullish things, but you got to be able to clear that 200 period moving average. And is what Bitcoin did is it consolidated around it, eventually got above it, and then the 50 is now curling up, and at some point Bitcoin could pull back to it. It's likely going to get a bullish cross soon. You can see my latest Bitcoin video at the end of this one. I'll link it. We've had this winning streak on the NASDAQ and the S&P 500. Since our low right here, we've had a winning streak. Had one day where it was slightly lower. The S&P in 9 sessions has not had a down day. It's going to happen at some point. Nothing goes straight up, nothing goes straight down. But you have some divergences. It may or may not play out. It may just give us a pullback. A de-escalation day over the weekend or on into Monday, then maybe they don't play out. I talked about this inverse head and shoulders pattern that's setting up right here. And again, if we go to this horizontal support, we're directly under it right now, or overthrow it, you could see a right shoulder begin to develop here with these patterns. So we'll be watching, because we just got this golden cross of the 50 and the 200 here in the 60-minute time frame. It was the death cross that gave us this bigger sell-off. Get the golden cross. We pulled right back to it and we bounced. The gap lower was a gap and trap there at the golden cross.